Okay, can you see my screen? 24-hour stream? Crazy word. Okay, so today we're just gonna be going over some top-down examples. So if you guys look here, we got the daily and stuff. We're just gonna be going over like, higher time for moves from, whether it be like external back to internal, just the consecutive days. Here we have, um, sweeping a range low to range high, just really A and B on the daily chart, but we're gonna be going over all the days pretty much that offer trades. Here we have some, about 4 days here to go over. Um, and then we will do some questions, but yeah, I'm just gonna go over this real quick. And then, uh, yeah, we'll go over some questions and that'll be about it. I'm gonna try to be covering expansion model and also fractal model, just the different type of ways you can trade. The one thing I want to highlight here is that the framework is what is important here. You know, if you have the framework right and all that, any entry model is going to work. You're going to succeed with the fractal model or the expansion model logic. It doesn't really matter. What matters is the framework. So sorry if you guys hear some background noise. You might, but yeah, let's go ahead and begin now. So here on the daily chart on RTY, again, it doesn't matter what asset we use. Same logic applies to every single market. If you just take this manipulation leg here, we're inside of a dealing range from low to high. I can measure out this standard deviation as a more of a confluence for a new phase of price, right? Right here. Right, so the expansion, consolidation, right? Some sort of manipulation to trade back into a range. When we want to trade back into a range, this is how we want to trade back into a range. I've said this a couple times. When you have a dealing range, when you're coming off of expansion, you do not want to trade retracement back into a range, right? Because we don't want to trade away from failures, right? We want to wait for a manipulation to create a protected swing to trade expansion back into the range, right? So we're going to trade away from this manipulation back into maybe EQ of a range that, is taught in the course. So that's kind of what we have here. When we think about the weekly profile, the way a weekly candle develops or a bearish candle, any candle, is we want to see it open high first. So you see this open high first here into this high, right? We're not creating a wick on the weekly candle. So you can even trade this day back into the range if you get a daily profile that aligns with that. And at this point, we're just trading expansion back into the 0.5 of this range from low to high. So that's the higher time frame framework. Now let's go into the daily, open, high, low closes that we're framing the expansion candles back into the range. That's all we're doing really, right? We're just framing a higher time frame model, right? External to internal. We're trading expansion candles back into the range. So all that is required is a daily profile that really aligns with this small opposing wick that we like to see, right? That supports expansion. So let's go over the first day here. Now, this is a bit more advanced and maybe even tricky. I've already went over this profile before. I use this all the time. It's called the delayed protraction profile. It's essentially when the market opens up and it leaves from the open, right? And then it comes all the way back to the open, creates a new wick, right? A New York session at a key time with SMT, right? And then so at one point, this was a wick, right? The daily candle looks something like this. I draw it out. At one point, the daily candle had a large wick right here, right? And it's creating a new wick, right? At this point. So that is manipulation. And then we just expand away from that. So it's basically expansion back into the range, expansion away. And you're going to see this profile a lot. I went over this a couple times, but it's not in the course. But I learned this from a Fees. I don't know if you guys know Fees, really good trader, but I learned it from Fees. So when you look inside of here, we don't have a candle 2 closure, right? So we're really trading the reversal day almost. It doesn't create, a candle 2 closure where If I show you over here, we don't sweep out this candle's high. We have that CSD, right? We're trading away from the opening price, which doesn't support a bullish day, right? Because we're creating a very large wick. That would be a very large wick. When we just create a new wick, it's creating a very small wick. See that? So this is why this works at a relevant time. So if I show you, first, let's go over this though. You see this here, this is our draw on liquidity. So this is the current week's low. This is why we can't trade this, is because there's no established low of the week. It's just 1800 on Sunday, right? So this is why we can trade this back into this range. When I go to the 5 minute or so, right, you're gonna see that 9:30, right, make the opposing run to the draw and manipulate this. And there is lower time from S&T as well here, but it's not swing point S&T. On the lower time frame, you're gonna see it. If I pull up YM, you'll see it, but um, right, we get a CSD here. And there's really not much else after that. Maybe you want to take something like this, but I just wanted to show this day. It's not really something that's like totally clean, but there's no fractal model, I don't think. Maybe there is on the 1 minute. I can't go to the 1 minute right here, but you get a 15-minute close there. But um, yeah, there's not like a continuation after that, unfortunately. Really kind of just sells off. That's not the day I really wanted to highlight, but I just wanted to show it is possible to trade this day with that profile logic. And I think I traded this day if I remember. I'm not really sure. Because when you see this, very good signature to trade back to that weekly open. But anyways, let's go to the daily closure. So at this point, you have a swing point. Now, it is not a ideal swing formation where you form candle three CSD, but it's a very strong close in candle three here. And when I look, is there opposing draw? Yes. Right, you have these equal lows, like a low hanging fruit. So this day here has some logic to go lower, right? Also closing over that new week opening gap. And your invalidation would probably be this CSD. It's a bit high in the range for sure. Like this opposing run is quite large, right? You can take this. It's very quite large, but I'm going to show you why you can trade this. And it's really because we haven't taken the draw out, right? And it's the time that we reverse here. We're using drivers. So whenever you have a large range SMT like this, it's better to confirm with a small range SMT. So a lot of times, I'm going to show you an example over here on YM, but let's say you have a daily SMT right here, right? When you confirm that with an hourly SMT, right? And then you get that CSD. This is like the kind of like a filter that you can use to validate this larger time SMT. Sometimes we just break through a larger time SMT. Sometimes this asset is just lagging, it's just stronger, and it will take out this low. But generally, when we get that, second SMT in the lower time frame, it'll hold it. So here, I think you have like a 4-hour CSD actually. It's a bit cleaner. Yeah, you have this 4-hour CSD. So if you're going to use my model, where we see 6 a.m., right, tagging this fair value gap, creating an SMT, and you want to trade the next candle's lower, right, into this low resistance liquidity. Because you don't expect the market to reverse from failure swings. Doesn't really make sense, right? So yeah, this day, I'm going to show you the lower time frame PA. Right, so we have 8:30 news making the opposing run. And once we see 9:30 really trade away from that, that's what really validates that, right? It makes it small opposing run and then validates this as almost an order block because we create SMT, right? Here you have continuation signatures away from that. If I go to the 7-hour chart, let's see if we, see any logic behind this profile, right? So we see the 1800 candle, the 1 a.m. candle just consolidate. So this is just a very large manipulation here. Not ideal, right? You see the previous day as well, the 1800 candle, 1 o'clock candle don't really do anything, right? And then you see the majority of the daily range is printed from that 1800 candle, or sorry, the 8 a.m. candle here, right? So you see all these little highs right here. They just get manipulated. But since this is a large wick, the thing about a large wick, the daily candle, you want to target around either the current day low, right, or around the opening price. So you could trade this back into the range or just target this. You don't expect price to come way down here or something. It doesn't really support that, that expansion candle really. So yeah, the wick is like almost as big as the body. You can already anticipate that with the way this candle forms. But at this point, we're trading within a expansion candle on the 4-hour chart in the 1400, right? So 6 a.m. forms a high today. We have 10 a.m., 1400 expanding away from that, right? So it's just a bit of a larger opposing run, but it's just within, intermediate time frame order flow, bearish order flow, just a pullback, right? So go on to the next day. Let's look at that closure. It's very important here. At this point, now we have a valid, CSD on the daily time frame. So when we have oops, we make that open high on a Monday, and then we're getting that expansion. We haven't expanded yet too far yet, right? So we can definitely expect Thursday to expand, right? Remember, our goal is equilibrium here. So when we look at our validation point, what can we use? Right, these opposing candles is where we anticipate the high of the day to form, right? So if you use my model here, right, we have 2 a.m. hitting these opposing candles or this fair value gap. It's closing an expansion candle, so we form a reversal off of this candle's high. We're trading within a candle 2 on the forward chart. So this is how you anticipate it. It's systematic. It's mechanical. So if you use a 7-hour chart, if you use that, we have consolidation in 1800. We have 1 a.m. candle making the opposing run to the draw, right? So possibly creating a high day. And then within 8 o'clock candle, we form an S&P within this opposing candles, right? It's just a range, right? From here to here. So we're just continuing that bearish order flow. So here, you can maybe, if you really want to add confluence, maybe this lines up. Okay, it does, right? For the new phase there. Here you have a couple of entries, right? Possible entries. You have a what do you call it? An ideal swing formation, right? Where we have a swing formation. Candle 3 validates this as an order block. So you can trade this candle lower, right? You have on the 15-minute chart, if you use expansion model logic, right? We take out this high here prior to, the news events. We manipulate prior to news event and we create S&P prior to news event. So if we do that and the news event expands away, that's your validation to that for this being the high of the day. So remember that, write this down. If you form a, manipulation or high day prior to a driver and that driver expands away from it, that is validating it, right? So if it's 8:30, then you can see this not last Friday, but the previous Friday. We expect 9:30 to continue, right? And here you get a nice opposing candle here. So if I show you 6 a.m. candle that we're trading within, this is all valid to trade. Right, so you can enter here, you can enter here, you can enter here. There's many ways you can enter this trade. Now, if I show you the fractal model here, see if you can see that. I think it was right here. So it'd be a very large stop loss really here. I'll probably wait for the next candle open. So you can see we open high first here, like that posing on first. So 1 hour open high first, 9:30 breaks that CSD. So pretty large wick on the 1 hour candle here. But again, we haven't really hit anything and it's with the driver. So you can take this here, in my opinion. I would probably just put my stop loss probably right here at the body. And I can target, towards whatever, right? I can target 2R or something and you get 2R there. Or, I mean, if you're not a fractal model trader, there's logic here regardless. If you're a expansion model trader, there's multiple entries here, right? So yeah, I think we used the 7-hour chart already to explain this here. So 1 a.m. creating the opposing run. We expect basically 8 a.m. to flip that, right? So hopefully that makes sense there. So let's go on to the next day. So why can we trade this bearishly now? Usually, if Monday is high of the week, you don't want to trade. You don't want to trade a continuation on Friday. But what do we see Monday do? It doesn't expand. Right? You don't have 5 days of consecutive expansions. And if we use the 3-day expansion rule, I mean, yeah, we do have three, right? But when I look at this candle and just this overall range, it's not very large, right? Like it's not crazy large. It's kind of hard to anticipate. You can't put like a number on it, really. Like if I look at, this candle's range here is basically these candles range. You know what I'm saying? So it's not like the craziest range of all time. You can just validate it with a daily profile. And we still have that draw open, right? We still have the 50% of this range to target. So it's still valid to trade. So what this profile is the same profile I showed you earlier. So this being the daily open, right? The high of the day is just 1800, right? So when we come back to that, right, we're just creating the new wick. See that small wick? Same thing as over here, right? Same exact thing. And then we have SMT, right? So here, again, it's systematic, right? We're coming back to the opening price. Sorry, I'm like lagging here. We have SMT, that's check. Right? We have a small posing run, that's check. And we have a driver that creates this. So 830, right? Creating that manipulation. And then the confirmation set is 930 expanding away. Okay, you see that? And here is just a fractal model, right? If I show you on the hourly time frame, you have a candle to closure 8 a.m. So 9 a.m. You have 930 within that time interval. We can show you that lower, right? Here's 930 expanding away, validating that. It's a bit ugly, to be fair. There's also expansion model logic here where you have a 50-minute CSD. Again, a little ugly. Like, I don't know where to use the CSD. I would just use this probably, these opposing candles. And you have a continuation on the 5-minute chart here. So it's a fractal model. You have SMT here as well. So again, larger time frame SMT, lower time frame SMT. And yeah, it's not bad, right? I probably wouldn't enter down here just because at that point we've taken out all these lows and we're really low in the weekly range. If I show you the weekly chart. At that point, I don't want to enter in the discount end of this, right? And we already hit EQ of that range, so not really interested in that. So your entries lie up here, right? Inside of the wick and around the opening price of this daily candle. That's always where you want to enter, right? If I show you the 4-hour candle, right? We have 6 a.m. from the high of the day, 10 a.m. continuation, right? So exactly how I trade that stuff. Here as well, you have 6 a.m. forming the high, 10 a.m. continuation. So you see how it's very, it forms all the time, right? Here you have 6 a.m. high of the day, 10 a.m. continuation, right? Here you have the same thing, 6 a.m. high of the day, 10 a.m. continuation. So you see why I use the 4-hour chart? Very repeatable, but it's all the same thing. If I use the 7-hour chart, it's really the same thing, right? You have 1800 candle consolidating, as well as the 1 a.m. candle. They don't really do anything. And you just have the manipulation of those two highs really with an SMT forming the new high of the day at a key time. So hopefully this made sense. It's just an external manipulation, expansion back into a range. Right? That's all we're doing here. Let's move on to YM. Let me see if I'm still good here, guys. I'll still see my chart. Am I still good? Just want to make sure. Are we still good here? All right, cool. So let's go on to the next example. This is YM. So here, it's a weekly. I know we don't really use a weekly chart. It's already top, but it's all the same, right? We have a weekly fair value gap. So whenever you want to trade, from a range, internal range to external range, you always want some sort of manipulation. That's what we see on the higher time frame here. You just have a range, right, from low to high. You have this opposing candle, this fair value gap. So when we form a protected low on the daily time frame, that gives me narrative to trade to this external high and even beyond that. So that's kind of what we're doing here. So again, when we think about the weekly candle, what does Monday do first? Opens low, just like over here. It opened high. Monday opens low, and then we get a candle to closure on the higher time frame here. Possible low of the week, right? We can't displace underneath this low. And yeah, we trade continuation on Wednesday. So let's go look at that real quick. So here we have a manipulation. Let me just delete some of this stuff here. So here you have a manipulation of this low. It's the previous day's low. And you get some sort of closure above this opposing candle, right? It's a bit ugly here. So to use like the previous day's range, like what are we going to use here? I mean, there's nothing really here that's really clean. I got a flower maybe. Um, yeah, I mean, there's not clean P, right? There's not a bulky candle. So really, I'm just going to be really focused on how this candle develops. So notice how it develops. Open low first. That's always what we ideally want to see when we're framing an expansion candle to the upside. And the low of the day is formed from manipulation SMT, which is what I like to see personally. And then we get that closure above, right? So let's just bar replay this real quick. We get that CSD forming the low of the day. So in New York session, we have a valid low of the day. So if we have a valid low of the day prior to an open, what did I say earlier? Or prior to a driver, the driver should expand away, right? So let's go to the 7-hour chart. What do we see here? We see consolidation and 1800 candle. We see 1 a.m. creating the low of the day. So what should 8 a.m. candle do? Expand, right? Let's go and see what that looks like here. So first off, if you want to use the fractal model, it's the same thing, right? The 2 a.m. candle forms a low day, candle 2 closure. So we can trade 6 o'clock candle that has the time drivers, the intervals. We can trade that higher, right? And we can also look for a 10 a.m. continuation, right? You have a candle 3 closure validating these as an order block, right? It's a very strong closure. And we still have a draw intact right here, right? So we want to focus our attention, after the drivers here. So remember, we're within that fair value gap on the hourly time frame and that opposing candle on the hourly time frame. Just leave this stuff here. Um, sorry, here you have 9:30 open. Let's go to a lower time frame actually. Right, so you have 9:30 open. Make an opposing run to the draw. The draw is higher. An opposing run, create a lower time frame protected swing. You pair that with an SMT. So this is a entry already. If you want to enter here, right? Because we already have a CSD, so it's like expansion candle logic where you can just enter this, right? And then you get, some some fractal model logic, right? Where we have a swing point on the 4-hour chart, and you're trading the 10 a.m. candle. This is how I trade as well. Right, 10 a.m. open low first into a key level, right? And then you get an ideal swing formation right here. So this is where you can also trade the fractal model on the 1 minute. Is when everything is aligned. This is your highest probable like scalping opportunities. Is when everything is aligned, right? And you can trade right here. These 2 candles basically on the 1 minute. I can't go to the 1 minute, so I couldn't show you, but this is where you'd want to be looking, right? And this entry would look something like this, right? Just going for like 2R or this high right here. Again, I put my stop loss at the bodies, but that's just me. So it would look something like this. This price shouldn't come back here. But my trade would look something like this, personally. But yeah, that's how you can get in. So there's 2 opportunities here. There's really more if you really want to use the 15-minute, 1 minute. Again, I just can't show you that. So let's move on to the next day. Hopefully that makes sense. This is like a pretty much a picture perfect classic buy day London reversal profile here, where the drivers expand away and everything. So really clean example there. Let's go on to the next day. So next day is a bit interesting where the previous day prints a very large range, right? We still have a draw, but we need a profile to align with that. What we're going to see is we just consolidate here. All right, so if this is going to be a bullish day, we would want to see the drivers basically create the low today, because as you see, we do not see London create the low today. So we have 8:30 news here, it looks like. All right, so what we would want to see is basically 9:30 or 8:30 create the low today to expand higher, but we never do that, right? We never have that, 15-minute CSD. By the time we do, it's just too late in the day, right? So just a tip, if the drivers fail to create the low of the day or really reverse price, it's very low probability that we're going to get some reversal like 12 o'clock or something. It's just not going to happen easily. This is just one of those days where it's more of like a retracement day or consolidation day. And then you have opportunity the next day, right? When you look inside of this wick, we just look at this in general, right? We have expansion, consolidation, which is a continuation signature, right? Price is not going to generally reverse from these highs. So when you have a low of the week put in on a Tuesday, Wednesday expansion, a pause on Thursday, right? The weekly profile is already aligned, right? Trading to already in distribution on the higher time frame. This is just that phase of reaccumulation essentially. So inside of this wick, we have a manipulation from a 4-hour fair value gap, right? And then we have a CSD. So this right here is our new invalidation for the next day. We want the wick, if we're going to continue this next day, we also have this daily CSD as well, right? So yeah, we want to see a continuation that next day. And it should form inside of this wick, right? So much like this day where we open low first, see this open low first, always ideal, right? And then we form that CSD, formula low day. If you look at this 7-hour chart here, start this pause, it's like lagging or some shit. Okay, so we have 1800 consolidation. We have a 1 a.m. candle, creating that long wick, right? And then internally to this candle, internally to it, we have that 1-hour CSD. So we can already assume that this could be the low of the day. If this is gonna be low today, then the 8 o'clock candle should just expand, right? And that's where it forms as low, is within this opposing candle that is within the 1 o'clock 7-hour candle, right? So let's go here on the 15-minute time frame. Sorry if there's lag, I don't know what's happening. All right, so we're gonna use drivers like we always do. We have 8:30 right here. I don't know if this is news. Okay, it is news. So 8:30 doesn't really do anything, right? So we have to roll that over to 9:30 really. So I guess 8:30 just makes this opposing run, right? Takes out this low and we form an SMT. So if we close over this opposing candle, right, this is an expansion candle or expansion model logic to go higher, which we do, right? If I go to the 4-hour chart, I think there is, okay, there's not, but if you want to use my logic of trading within a, reversal to expansion candle, right, you can trade this, right? Because we have that small wick within the 6 a.m. candle. I think there's, yeah, there's a fractal model right here, right? We have a 1-hour close here. The low is SMT. And we have 9:30 creating the validation of this manipulation. So pairing a driver with manipulation, we also form an SMT here. So really it's expansion model and fractal model at the same time, right? Same thing. And then you have continuation of that as well up here, right? We're failing to manipulate this high, right? Which is a continuation signature, right? When we fail to manipulate, we're closing. It tried to manipulate, right? This is something AM talks about when SMT in this fair value gap. We close above that. So here is the 10 a.m. open, right here. Where is the 10 a.m. low likely to form, right? Within this opposing candle, right? So that's also an entry you could take, right? And mind you, our high time frame draw is up here anyways. So we're not expecting price to reverse here regardless. So yeah, that's that day. Hopefully that makes sense. Let's go on to the next day. So here we have a very strong closure above this high. So generally, we're just going to see how this profile prints this next day here. Let's look at the 4-hour chart real quick. to see if we can see any key levels, right? What do we see? We see once we take up this high over here, what phase of price do we get? Because that's all we're waiting for. We get consolidation, right? You can see price inside barring 3 times within one candle. That is a consolidation. So when we manipulate first before taking out the external high, this is the ideal scenario to trade consolidation, is when it's pro trend. So we expand, consolidate, we take out this side first, right? We take the opposing side first because price cannot reverse from consolidation. Like I mentioned earlier, price is not going to reverse from failure swings, right? We need to like manipulate to basically reverse. So we manipulate this side of the range first, right? This is probably the most high probable like scenario, because this is creating the low of the day, right? Creating the wick. We have that small wick supporting expansion. So it's like within a daily profile too. So like really high probable. As you see, this is consolidation New York reversal profile. If I show you this 7-hour chart here, we see that you have consolidation in the 1800 candle. So you're not going to trade within this candle. You're going to let it close. This candle didn't really do anything because it didn't create the reversal of the day, right? We don't have a CSD. So this is when we're going to roll it over to a driver, ideally. If we're going to have a New York reversal, pair that with a driver, which we see, I believe, 930, right? You see 930 makes an opposing run, takes it a short-term low, creates an SMT, closes over, right? So this is validating the low of the 8 o'clock 7-hour candle to expand into low resistance, right? So high resistance to low resistance, right? That's all that is. Creating the low of the day. Is the low of the day have a small closing run? Yes. Right. This is a 30-minute, 3-minute fractal model here. You see the 9:30, 30-minute candle. This is the 10 a.m. candle. So this is how I trade. If 6 a.m. candle created low today, then what will 10 a.m. candle do, right? Expand. That's what we see here, right? Expansion. So here if I go to 3-minute, we have the opening price of 10 a.m. validating this as its order block, right? So this is a intracandle CSD right here. And you have one entry right here or the second one right here, right? But whether you trade the fractal model or the expansion model, there is opportunity here, right? You have a decent little, close here as well. We can't manipulate this high. So same logic as earlier. Something that AM talked about a lot. You have some decent stuff here as well. But really, our focus lies on anything around that manipulation, ideally, to trade into this high and through it. So yeah, I mean, I think there's an hourly fractal model as well. Yeah, there is an hourly fractal model as well, right? Hourly 5-minute. Right. So whether you trade whatever, right? It's showing you the versatility. You can use the 3-minute, you can use the hourly, you can use the 4-hour, right? Well, technically not, we don't have a 4-hour fractal model here, but if you want to use my logic, right? Same thing, right? 6 a.m. candle, creates low day, it's an expansion. So that was YM here. Let's go to gold now. Let me make sure I'm good as well here. My good guys still good. Gonna move on to the next one. All right, cool. Okay, by the way, I already went over this, but yeah, this is just manipulation of a range low, a range high. That's all that was within a weekly fair value gap, right? Let's go over what context this would be. I probably went over this before, but here, right, so we have, if I really want to break it down to like the monthly time frame or monthly candle, we have the previous month hitting this fair value gap. So when we see this monthly candle kind of consolidate and then create its low with manipulation, we can pretty much assume expansion at this point. We can maybe assume this is the monthly low, which I don't think it ended up being, but we can trade away from this. Like simply put, we have Friday manipulating, so we can expect early week to expand. It's just manipulation into expansion to this high, right? That's all that is really. And this high, I think it's like a weekly fair value gap. I think. Oh no, it's not. Okay, I'm thinking of something else. But yeah, this is just manipulation to expansion. Really, we're gonna let Monday go here. We have the price action here is like not really favorable at all. So we're going to be going with these 3 days. I traded these 2 days. Here we have a ideal swing formation, right? Where we close a CSD. So these 2 days are going to be really easy to trade to this high, right? Because we failed to manipulate this high. If we fail to manipulate this high, we're going to go, right? The next draw, right? Which would be just above that, the next swing point. So let's go over these 2 days here. All right, so do we see anything for the low of the day to form within this candle's range? Not really, right? I don't really see anything here. We kind of open up here. There's no opposing candles relevant, so we need to create that within this candle, right? So what we see, if we go to the 7-hour chart here, we see 1800 candle kind of expand almost, but it doesn't really create some protected swing to trade away from. So I'm not really viewing this as anything relevant. Within the 1 AM candle, we, however, do, right? We get basically manipulation in a low day. If I showed you, I think I gotta show you, it's like probably this. Yeah, so you see this here, right? This SMT. So that is manipulation. So manipulation creating the low of the day. So that's something that is relevant, however, right? And here, these consecutive series of opposing candles that created that SMT, we're going to use as the validation of this SMT, right? And the low of the day. So when we look left, we pair the low of the day with the small opposing run to be expansion away from that. Yes, right? We have that. So we open up, 8 o'clock candle, right? We have a reversal already. So we can expect expansion 8 o'clock candle. If you want to use the 4-hour fractal model here, right? We have a ideal swing formation where we create an opposing candle. We have this here creating the low of the day into a fair value gap. So really clean stuff right here. If we look into the 6M candle, we can trade that. All right, what do we do? Like I said, every single candle that we want to frame, if we want to frame bullish, open low, high close first, right? Open low first, ideally. That's exactly what we do here. This is like textbook where it just opens up, it just opens straight down. Like this is exactly what I want to see. And then you get, right, that close there, right? So this is a 4-hour, 15-minute, fractal model. There's also a couple of other ways you can enter this. Not on the hourly chart. I think it was like 30-minute. Yeah, like look here, right? There's a 30-minute close here. This is how you guys want to enter fractal model stuff. Is it within continuation of a higher time from candle, right? The low today, you're trading away from low day. Here you see you have a candle to closure, right? So this is where you want to look for like 30-minute or 3-minute fractal models or 15-minute, 1 minute, stuff like that, right? So here you would need it to close above here, right? To trade this fractal model. Right, so you get it there. So this is a valid entry to take, right? Does that kind of make sense? And here, I don't think this is that clean in my opinion. You get an ideal swing formation here. So candle forks, continuation, but this is not, I don't consider this as an opposing candle really. Maybe this, if there's like SMT here or something, I would maybe consider that. But yeah, your high probability entries are right here, essentially, like within this range, right? Before we really expand here. And you see, we can't manipulate this high over here. So really once we close over here, right, that's your high probable entry as well. So hopefully that makes sense as well. Using the expansion, model or the fractal model there. Maybe there's some 5-minute entry there as well. Yeah, like this is also valid, right? As a continuation here. Did you see this candle here open low first? And yeah, this is also the 8 o'clock candle, guys. The 8 o'clock candle opens here. It's opening within a key level. So this is when you can drop down to the really like the 5-minute and stuff like that. Is when you're really close to an invalidation level. Okay, so this is completely valid. to trade the 5-minute for expansion candle logic right here. Right, this is just forming the low. This is like T-Trade's intracandle CSD almost, where the CSD is just forming the low of that candle, right, to continue, right? And we also have like failure swings as well on the lower time frame target. So that's that day. Hopefully that makes sense as far as the framework there. So if you look at the closure, right, we have a very strong close. So we're going to want to see a continuation on the upper half of this. Now, on this closure, let me first replay this to the end of the day. Again, you're going to ask yourself, is there anything to really look for? No, right? There's really not. I'm not going to use this opposing candle, even though it rejects it. It's not significant enough for me to really anticipate the low of the day to form there. So intraday, much like we see here, we need to see a low of the day form, which is exactly what I like to look for, which is what you see here as well. It's manipulation creating the low of the day, right? Same thing over here. We have S&P. Here we have a CPI this day, right? So I look at the 7-hour chart here. What do we see? 1800 candle do nothing really. It doesn't form the low of the day, so it's irrelevant. 1 o'clock candle doesn't do it either. It just consolidates within that 1800 candles range. So the ideal, signature for trading away from a consolidation is what? Manipulation. Like I said, it's always best when you're in expansion, you consolidate and you manipulate. It's the highest probable framework you can trade, right? When this creates a low of the day, has a small wick, SMT, all that, with the driver and stuff that you're gonna see. This is as high probable as it gets, man. You have a higher time frame draw and everything like that. If you want to use my logic within trading within a expansion candle on the 4-hour chart, here you see we can use this as a key level. It doesn't really matter though, because the low of this candle is created from manipulation. But you see this candle hits the key level, it doesn't form a reversal, so you frame reversal off this candle's low, which is that hourly swing low. So I traded a fractal model here, but I'll show you multiple examples of what you can take within the expansion model and all that, right? So you have within this 8 o'clock candle, you have CPI. So 830 is within this candle. I'm going to show you here, right? You see that, but you're going to see that actually we manipulate this low prior to the news event. So like I said, if you manipulate prior to a news event, what's the confirmation to that? It expanding away, right? That's what we do here, right? This is one of the most repeatable frameworks you're going to see in the market, is with drivers. So here is your first CSD, right? If you're expansion model trader, and then you can drop to the 15-minute, the 5-minute, to look for continuation. And here, right, I'm going to refer, I use this right here, right? You can maybe use this. There's maybe, I don't know. I wouldn't use that, to be honest, but if I look in this candle here, or I'm trading a continuation, and this candle here acted as a reversal into expansion into a high. So I want to be a little bit more conservative with the way I, confirm this low of the candle. And this is just perfect where we run out a short-term low here. You see that? They close above this here, creating an ideal swing formation. This is perfect. So this is my entry right here. When they close, right? And I took it to this high for about 2.8 R there. You could have targeted a little bit more, right? Maybe that gets hit. It doesn't get hit, but here. But maybe you could have trailed for more, but I was happy with that. So that was my entry here. And that was the fractal model. There's a couple more ways you can enter this as well. There's a 15-minute, 1-minute fractal model possibly here. We can look inside of this candle. Just curious. So I mean, it would really have to be this. That's what I'm saying. I need to see like an SMT. Like this is technically an order block, but it's just like these small body candles. I don't really like. It's technically valid, but I'd maybe wait for this right here, personally. But yeah, right. So that was also formed from a 30-minute fair value gap as well. So from a key level, it doesn't have to be a 15-minute key level, guys, by the way. It doesn't have to be. It could be a higher time frame key level, right? But what's important right here is the framework, right? That's why this stuff works. So yeah, those are some, ways to trade the expansion model and also the fractal model there. And I took this here. So what about the next day where we hit this key level, right? We can expect a new phase of price, right? It's that Thursday counter profile where within the first 3 days of the week, we expand into an objective. So when you expand into an objective, you can get a new phase of price, right? If I show you some stuff here, like when you expand to this high, right? What do we go? What do we go under, right? Consolidation, right? Does that make sense? Let me go over here. We get more of like a reversal almost, right? You can expect a new phase of price every time we trade into a higher low, right? Here, get a retracement. Here, you get a reversal, right? So it makes sense, right? When you take out these lows over here, you get a consolidation or whatever you want to call it, right? Retracement, whatever. So especially with this large, expansion range, I can expect a new, just to come back into the range, right? With that protocol there. So this candle here is an expansion candle. So I'm going to refer to this high as a reversal point, right? And if you want to trade a candle to closure back into a range, it has to be reversal into expansion. So it needs to form a small wick to be a reversal to expansion. And it also needs to open high first, right? Because if it goes open low first and then shoots at the high, it just doesn't have enough time in the day to go open low, high, low. It just doesn't have enough time, right? It's always ideal that it opens high first, creates that CSD. You can trade the continuation back in the range. That's exactly what we see here. And we have news as well here. So when you look at the profile for the 7-hour chart, you actually get 1800 forming the manipulation high of the day. So you could trade this 1 o'clock candle. I'm going to show you why you can trade it. And obviously you can trade that 8 o'clock candle. This is what I traded within to these lows right here, right? This is a daily fair value gap. So let's go ahead and look inside of that. So like I said, you want to open high first. So just open high first. You get the validation of that within that 1800 candle. And then you get a continuation within the 1 a.m. candle. This 1 a.m. candle, it opens high and you get this here, right? This is an ideal swing formation. So this is you can trade the fractal model here, right? Lower. Maybe even the 30-minute or something, right? Okay, I don't really see anything. But right, you have an opportunity here, right? Trading London session, right? Continuation. You're just within this opposing candle, right? If you're an expansion model trader. But what if you're a New York trader like me and you open up the day like right here, pretty much? You're just in distribution. You're already trading away. So like I said, if there's a driver, it's always ideal to pair that driver with just wait for the driver to basically play out. And this is always what you want to see. Opposing run to the draw and a close through, right? That's how you pair a driver with your entry for continuation. This is in the course. You want to go and look at that. So this is the 8 o'clock 7-hour open right here. So let's go and wait for news to play out, which is 8:30. We're going to wait for that. Right here it is, right? Making the opposing run to the draw. It creates SMT here. So again, this is manipulation. So it's creating a protective swing within higher time frame manipulation, which is always ideal. We're also within a 30-minute fair value gap. You have an opposing candle on the 30-minute. So when I drop down to the 3-minute chart, this is what I entered on right here. Validating this as a protected high. And then I just took this lower, right? Into this low, right? So what about fractal model traders? How can you trade this? Let's go ahead and look. So within this 30-minute, this 8:30 candle, we form a candle to closure right here, right? And it's obviously hitting a key level. You have opposing candles. You have like multiple entries here, guys. If you're an expansion model trader, um, like within this here, right? You have a continuation signature. So here's the first entry. Here's like the second entry. Here's even the third. Like you can enter this as well, just because the SMT. If you want to wait for this closure after news, like you can just mark extra right there, honestly. But right here's a candle two closure, and this is how you want to trade the 1 minute charts. So here you open up near this key level, right? But we need that low close, right? Then we manipulate here. So again, the high of this candle is manipulate. This is ideal, right? So you can just enter this right here. You have the intercandle CSD, right? You can enter that, or you can wait for a retest. You get a retest there. Comes pretty deep, not ideal, but then you get this as well. Right, so pretty clean. All the way into our low, way over here. We eventually get there. So there it is, right? So that's pretty much it, guys. If you guys have any questions, you can go over that now. What time is it? We can probably go for like 20 minutes of questions or so, because we're already at like an hour, so almost. So I'm gonna scroll up here. So we started there. You know, like Monday range, high and low throughout the week. Yeah, so generally Monday, if it doesn't create a protected swing, I want to trade back to that. So if you just look at this week, like here, look on gold, we open up the week within a range. So when you open up the week and the previous week expanded like this, you're not looking for a Monday continuation, right? Just because of that rule, right, of a new phase of price. Because not only is it the beginning of the week, but just what the previous week did, right? So we're within a bullish range right here, right? And we're making quite a deep run here. So when you create this deep run, I'm not viewing this as a continuation lower, because when you're bullish, right, you don't create these deep runs like this. You're gonna see, with the way a weekly candle forms, a bullish weekly candle, you want to see go open low first, right? So that's what it does, and then it creates Tuesday reversal here. So I can already revert back to like Monday's high in this case as the draw, because when I go to the high of the week where it's just 1900, it's irrelevant, right? There's just a bunch of failure swings. So, and at this point, we're creating a protected swing. If you look here, we're creating a protected swing at the low of the week. So I would generally, want to trade away from that to Monday's high, and obviously beyond that. And we get a candle two closure here, or sorry, a ideal swing formation right here for a candle four. For the gold example, December 10th, does the London manipulation need to occur at a certain time? No, just like about 2 o'clock to like 6 o'clock or something like that. It's not super strict or nothing like that. All it is when if you're a New York trader, all you're gonna ask yourself, is there a valid manipulation to trade away from? That's really it. It's as simple as it gets. I've noticed that GC trades a bit different than USD. Yeah, I don't know why that is really. But I don't even pay attention to XAU USD. I really don't. Yeah, sometimes it's different though. It's weird. And then sometimes it's different. Like Forex or CFD feeds are like so cooked. Like just the broker manipulation and all that. Like it's weird. Could be a dumb question, but for open high low close, we consider 1800. Yes, we don't use midnight open. It's only 1800. Also for expansion, bullish, do we wait for a drop immediately after 1800 for a valid? So it doesn't have to like do this exactly. This is ideal. Like I showed you some examples of that. It doesn't have to immediately go, 1800 drop immediately. It can do something like this, right? Where it kind of hangs around and then drops. But the thing about this here is you're gonna be considering this as an open high because it didn't do anything. It's not significant. It didn't trade into a key level. It didn't manipulate. It didn't expand away. If you saw something like this, if you're trading a bullish trade, and we do something like this is significant, because I can show you an example of this. Wouldn't really be ideal to trade to frame an open low high close, because the high of the day, it opened high and actually manipulated and expanded away from that. I can kind of show you an example of that. I think it was like this day. So here we had a possible idea to trade lower, because it's valid, right? You have a ideal swing formation, but with the way this kind of forms, it invalidates it, essentially. You have expansion, consolidation, manipulation. Now, the consolidation low did get manipulated here, as you see. So you can see how it reversed. So you see the way this candle forms, it goes open low first. Uh, wait, is this the example that I'm trying to refer to? I don't think, I mean, this is not the example I was trying to refer to, but it's the same thing, really. I can show you the example I was referring to, but here we open low first, we get a CSD, and we get a continuation of that, which is not ideal, right? But I was trying to find a more like, here it is right here, actually. So if you see here, we have a candle two closure, we have a CSD. So mechanically, we have everything that we need to see. And then you see how we open low first, and then we manipulate, we close over here, and then we expand back in the range. This totally invalidates this idea to go lower right here. Does that make sense? Stuff like this, though, you can't really anticipate this happening. So sometimes, this is how like reversal days form. It's like you can anticipate this happening, right? Because we open low first, right? We manipulate. So if you're gonna trade this candle two, this candle two closure, you have multiple like a candle three or candle four expansion here, you can trade this because of the way this candle forms, right? We're kind of open low first, forming the low of the day within a fair value gap, right? In London session to trade to the Asia session highs, but you can't really, anticipate this reversal forming. Right? You can't really do that, right? This day is really nice. See how it goes open high first, but it didn't trade into anything. So I'm almost disregarding that, right? Here we open low into a fair value gap, but we have this internal, or this lower time for manipulation. This is what I look for. I look for the low of the day to form some sort of manipulation, which we have here. Right, then we get a CSD right there. So if you just take it to the 7-hour chart here, you have 1800 consolidation. CSD consolidation. You manipulate those lows within a fair value gap. We're in the 1 o'clock candle. So 8 o'clock candle, you can trade that expansion higher. So yeah, right. It's also a fractal model. So you see how like the way I'm using the fractal model here, it's within like high probability profiles. Like that's how you want to use it. We're not pattern fitting this. You can see over here as well. We're getting the low day right here. Right. So you see this manipulation. This is creating low day. It's just like over here where I showed you earlier. That's how you anticipate the low day, But yeah, that's how you generally want to trade it. This open high right here, it didn't do anything, right? We didn't confirm it with the CSD. We didn't manipulate. Like it's very just choppy, and this is what we see, right? Manipulation, expansion away, right? And then here you get fractal model continuation, candlestick closure, and all that. So yeah, I am here going through fractal model and expansion models. Any suggestion on what are the steps to implement them? Yeah, so you need framework. That's gonna be. I would study like, the fractal model is one thing. Fractal model is one thing where it's really easy to learn. It's just following a flow chart, but you have to implement them when it makes sense, and that cannot be pattern traded. Any model cannot be pattern traded. You know, you need context and narrative for any model. There's no model that's gonna like, you know, perform its best when it's against the narrative and all that. So your ability to identify high probability conditions and low probability conditions is the real sauce. And that's kind of what the expansion model is. That's kind of what a lot of this is without you guys even knowing. So when you think about our way of viewing continuation handle, so if I show you maybe like right here or something, when we mark out the previous candle's range, sorry, let me show you a good example of a continuation. So even doing this, right, this is already a filter for high probability trading because this forces you to trade an expansion candle without you even knowing it. And when you add narrative like weekly profiles and all this stuff, it's a lot. It's a whole nother stream. Like what I showed you here is all high probability trading in my opinion. This whole stream really, but we can do a stream like how to, you know, frame those and stuff, but that's really the course, It's really the expansion model course. The trading with manipulations, that's how I view it, is trading within a manipulation within a candle. So I already have a stream on this, on how I view the highest probability, expansion candles. It's basically when, you're trading with an expansion candle. Whoops. You're trading with an expansion candle, but the low of the candle, so you open low first, ideally. And that low of the candle is formed from manipulation. So what's the logic behind this, right? You can really only anticipate expansion when you manipulate, because that's what happens after manipulation, right? Manipulation distribution. So if the manipulation creates that small wick, what does that support? Expansion. So the candle that I'm trading within supports the idea of manipulation into expansion, right? And you align this manipulation with an SMT somewhere, and then confirmed by CC and also a driver. So there's a ton of logic behind it. It's not an everyday thing, right? It doesn't form every single day, but when it does form, it's very good. That's a lot of what I showed you guys here. Um, I have a stream on that. It's like the second stream or something that I did. For manipulation, how important does the swing higher low need to be? Daily higher low, session higher low, random. It's like if you want to keep it objective, I just use an hourly swing low below the daily open, and usually the same day creates it. So what I mean by that, the low that gets swept is like intra-candle manipulation. I have a diagram on this. So basically the opening is here, and within that same candle, we print like a low, then it gets manipulated, you know? Usually that's how it forms, but it doesn't have to do that. Another high probability scenario is I showed you guys on IM. Like here's exactly what I'm talking about. An hourly swing low creates a low today. Pair this with the driver and SMT, right? Driver 930 SMT, right? Creating a low today. And the way the sessions form, ideally they print continuation signatures. So what that means is when you expand like the previous day, you consolidate or you retrace, leaving failure swings, right? It's more likely to continue, right? Because price isn't reversed from failure swings. So we manipulate, right? High resistance to low resistance. That's all that is, right? So, and that's represented in profiles within sessions. And the manipulation is just creating the daily wick. That makes sense. Having issues with 1 hour 5 minute with understanding when to apply the fractal model, when the footy has been taken or not, and the daily profile supports it or not. Yeah, I think I went over that in the stream pretty heavily here. If you missed it, Seattle chance second, then London reversal plus New York continuation. Do you require manipulation to get onside with New York? Oh no, not necessarily. No, if a low today has been present, let's say there's no manipulation. Like I should do some examples of that here on YM. Doesn't have to manipulate, guys. Like here, there's technically no manipulation, but it's just with the day, the way the candle forms here, right? There's an open low first. There's no hourly manipulation here, as you see, but we get it. I'm gonna require like a higher time from closure, so maybe like a 30-minute, 1 hour CSD or something. And this is the only area for the low today to form, like within this opposing candle, right? So when it's within a, already a T level, and we're just forming like a propulsion off that. Really, I'm just gonna use the driver to really. It doesn't even have to manipulate. Here, it does manipulate. It's always ideal to do that. It's always ideal to do that, but it doesn't have to do that. If it just maybe CSD, that's fine. It's just a continuation. So it doesn't have to do that, but I think there's another example here where we don't actually manipulate on the hourly, like right here. We don't actually manipulate on the hourly. Actually, we do. Sorry, we actually do because we have the SMT. So another asset, which was RTY, right? It created its low today from manipulation, right? So this is exactly what I look for, right? We open low first. We manipulate creating the low today. We have that small wick, right? We have the CSD, and then it's just continuation, right? Here we also create a protected low within that, but it doesn't have to do this, But it's definitely ideal. It's always ideal to pair your entries with, like I said, this is the course. It's in I think it's in the expansion model course, AMS course, pairing a CSD with a manipulation, SMT, a driver. Here is everything, right? It's paired with a driver, it's paired with a manipulation and an SMT. So this right here is going to be your highest probable entry model for continuation. So I don't actually trade like Mars. I don't actually trade all these pairs like because I require very specific framework, like I said. So it's not an everyday thing at all. You'd be surprised. I'd say Friday was my most traded day, but some of these days I don't have any trades, especially on indices. It was absolutely horrid. It was so bad. So okay, so continuation requires opposing candles, and you're looking for a close. Yes. So basically, you're gonna have a low of the day already put in, and then you want to wait for a driver. This is what I do at least. I always wait for a driver. I always wait for 9:30 for continuation usually, because something like this can happen. It's gonna happen a lot, bro. Where like you may sweep out this low prior to a driver and it just runs it out again. It's just safer to wait for that driver to make its opposing run or whatever. It's always gonna be safer. Yeah. So I'll probably wrap this up here, guys. Let's see, got any last minute questions here? Hopefully you guys learned something, but yeah. Also, what constitutes a driver? Is it just so any red folder news event 9:30 every single day? No, 4 hour time frames are not they're not drivers, but we use those for continuation. We want to enter around the opening prices of candles. So if you use my ideal framework, so this would be my ideal framework. What we're doing here is we're entering under the daily open, like we're entering within the wick, and that's always what's going to happen if you're going to, trade the way I trade. If I show you this example here, you're either entering around the opening price of the daily candle or below it. stochastic expansion. So here, again, underneath the open. Here, underneath the open of the daily candle. And then here you have the 4-hour open. We want to enter around the opening price of this candle as well. So last stream I went over this. I'll use the 4-hour chart, but yeah, it's like T-trades. He always says to enter around the opening price of the candle. How to calculate risk management. I think that's in the course, is it not? Can someone fact check me on that? Or is it not? Maybe it's not. I know T-trades has a video on this, bro. I know that for a fact. But as far as futures, a cool trick you can do, I'd have to log into like paper trading or something, but a cool thing you do is you're going to right click on a tool here. You're going to create limit order. I have to log in, but, and then it's just going to do it for you. It's going to do all the math for you. I guess another day, but this is getting a bit long here. But yeah, I would watch T-Trade's video on that. He has a video on that, Wendy. Yeah, there it is. Go ahead and watch that. He'll do a better job of explaining that. Yes, sir. Bye, guys. I'll catch you later. Appreciate y'all being here, and y'all have a good weekend.